Hello, everybody, and welcome to the second in Armanino's webinars on the PPP forgiveness program. Today, we're going to answer your questions, an awful lot of things that have come up in our conversations with our clients over the last couple of weeks. There's a tremendous amount of ambiguity around the forgiveness program, an awful lot of misperceptions. Our goal today is to try to help you understand exactly what we do know, what we don't know, and what we think we know, subject to further guidance that is hopefully going to be coming from the SBA and the Treasury Department very shortly. My name is John Schweisberger. I'm a partner in Armanino's business outsourcing services practice, and I'm joined today by Jenn McCabe, my partner as well in business outsourcing services. Together, we have been driving an awful lot of the work for the firm across our rapid response team as it relates to the SBA programs and talking with literally hundreds and hundreds of clients about what's happening in their businesses and what makes sense as it relates to PPP forgiveness. So Jenn, today we're going to go through a bunch of questions. We've organized these into three categories. There's about 24, a little more in total. The three categories are program level questions, questions around uses of funds, and questions around the forgiveness calculations. So Jenn, let's jump into the program questions first. Here's number one. My 8-week period won't allow me to make 4 regularly scheduled payrolls and 2 monthly rent payments. What do I do?
My first bit of advice here is don't wiggle around with your payroll periods, because most companies publish those payroll cycles to their staff when they offer them a job, or they're posted by the water cooler, and your staff count on those regular pay dates. So what we have determined is that it's pretty easy to get all your payrolls in. You may have to process that last payroll 1 day early or maybe 2 days early, so it's funding from your account and you can show the SBA and the bank that the money left your account. And as you most of you know, that the payroll hits a day or two later anyway, and your staff will not be upset if they get paid a day or two early. That's what I would do. The rent is similarly scheduling. Sometimes if you got your money on May 6th, you just paid the May rent. At the very end of your loan 8-week period, it's not quite time to pay July rent yet, but I would pay it a couple days early. And that way you can document that you paid both rents in the covered period. They are expecting to see 2 rent payments. Nothing will look amiss.
Let me follow up on that. What if I didn't pay my March rent and pick up the March and April rent and pay that during my period? Can I pay March, April, and May?
Well, the answer is probably not without raising somebody's eyebrows. Remember, your lease is going to be your backup documentation. Just like your payroll journal is going to document your expenses, your lease is actually going to document your rent payments. They are going to ask for that in your loan forgiveness package. So I think you need to have a lease that backs up the fact that you paid those months of rent.
Got it.
That's my safety answer.
Perfect. Love it. Thank you very much. Let's go to the second question. What happens to my covered period if I receive my funds after May 6th? We're starting to run into this now. The program ends June 30th, but 8 weeks is early July. What happens with that?
Your covered period is still going to be 8 weeks. It's not going to change. The covered period, when they talked about June 30th, it was originally that they were going to stop lending money out of the PPP by June 30th. They didn't realize they were going to run out of money so fast and have to get rid of it so fast. But your covered period still extends into July. It does bring up this issue of having to rehire people by June 30th if that's part of your strategy, which we can talk about a little bit later.
Yep, we'll get to that here shortly. Great, that's good to know. Let's go on to the third. Awful lot of people are interested in this one. Are payments made with forgiven funds deductible? My rent expense is usually deductible. My payroll is deductible. What about if I'm using PPP money for that?
Right now, the answer is no, but there's been enough consternation about that and people having a big fat cow about it that I think it could be changed.
Yeah, my understanding is that in committee right now, the group that actually created the CARES Act is saying, yeah, that's not the guidance that we wanted the IRS to put out. That's not what the intent of the program was, and they're trying to draft legislation to overturn that IRS ruling. We'll see what happens with
Yes.
that. Okay.
Yes.
Hey, I got a bunch of money because it was based on my 2019 payroll. I'm at a lower cost basis now than I was a year ago. I'm not going to be able to use all my money, Jen. What do I do?
Well, first and foremost, this program is a loan program. We all talk about how it's forgiven and it's granted and all this, but really in the beginning, this is a 2-year loan at 1%. So if you have money left over and you don't get it all forgiven, the balance becomes your loan at 1%, and you will owe it over the next 2 years. And that's my answer today.
Today, maybe I'll change tomorrow.
Well, if the Treasury says something differently, and they do seem to say something differently every day,
Pretty
but
much.
I've believed this from the very beginning, so I continue to believe that that's the intent here. They don't intend to punish anybody who didn't use all the money, who in good faith borrowed an amount based on 2019. You should not be punished if you have something left. They may ask you to continue to use it for payroll. They may say to you, we don't want you to use it to buy a new Harley Davidson. But at this point, yeah, I know it sucks, but you know.
How about a Learjet?
That you might be able to.
Okay, sounds good.
Business use.
I'd be riffing on my Pink Floyd if I went into that one, so I'll leave that alone. And we'll just move on to question 5, which we actually started to talk about here a minute ago, which is, do I have to rehire everyone? Can I fire them all again on July 1st if I hire them back before June 30th? What's the deal on this?
Well, the rule says you have to rehire everyone no later than June 30th. So people are asking us, I let everyone go. Do I have to hire them? Do I bring them back? And this is a terrible quandary right now, which is also leading people to think about other extending legislation that would allow us to use the PPP money past June 30th so that we could hire people when we have something for them to do. So the answer is you should run the numbers. You should do the math. Will it increase your forgiveness so much to bring people back that you end up with more cash? Or if you decide not to bring everyone back because you still aren't open and you don't have anything for them to do, is it better for you to hang on to the cash, to get less of your loan forgiven, but to have more left over that you have at 1% that you could then use to finance your business in July and August? And then the last part of this is an ugly answer. Can I fire them all on July 1st? And John, you and I talk about this a lot. The answer is yes. If you brought them back for one payroll and then you fired them again as soon as your PPP 8-week period was done, you would technically be in compliance, although you might go straight to hell.
Well, we don't want anybody doing that.
Right.
So in rehiring, do I need to do that before the end of my 8 weeks or just before June 30th?
I think that we should advise people to hire before the end of the 8 weeks so that when you show your payroll journals as your documentation for your forgiveness request, you can show that you had those people on the payroll journal in the 8-week period. Again, if your 8 weeks ends on, say, June 20th and you haven't hired them back, I think technically the answer is you could hire them back on June 29th. But your loan forgiveness package is, number one, it's not going to have an FTE, as they say, a full-time equivalent headcount that helps you. I think that you're still going to fall short on the forgiveness calculation in terms of both the headcount and the compensation dollars. I don't know that it helps you a lot. I think that if you want to rehire and that's your strategy to maximize forgiveness, you probably need to do it earlier in the 8 weeks, not at the last minute. I don't think it helps much at the last minute. At least the math I'm doing so far, it hasn't helped a lot.
Right. So just to sort of sum that up, while technically you can, we're advising not to, in part because of the intent of the law is to keep people employed. number one. Number two, you want to be able to raise that amount of money that's spent on labor costs to get it more in line with what you borrowed, which will improve your forgiveness. But number three, and this is very, very significant, that you do definitely want to be able to have that FTE count back up, because it's a pretty stiff penalty on forgiveness if you don't. So for example, if you had 10 employees and you let 5 go and you don't hire them back even for towards the end of your covered period, you're looking at getting half of the forgiveness that you thought you were going to get. So it's very important that you understand kind of what's in and what's out, what's good and not so good about this one, because that is a major gotcha that's written into the language right now. Okay.
Right, and you'd only want to do that, right, if you wanted to hang on to the cash because you had nothing for those people to do because your restaurant is still closed.
Right.
It's a tough decision.
Yep. And I think that's one of those things that if you think back to where everybody's head was at in the middle of March when this legislation started getting drafted, people's opinions at that point was, hey, we're just going to have this blip, might last to the middle of April. God help us if it goes all the way to the end of April, and it'll be a V-shaped recovery and everybody will be just fine. And so that was the kind of timing that got put into the legislation. And now that we have the benefit of 2 more months of hindsight, we go, yeah, maybe not so much. So I think that's one that there may be some change around that as we get into guidance, if and when SBA and Treasury ever issue more guidance that might clarify this for everybody. Okay, let's move on to use of funds questions. We get a lot of questions about, can I use money for this? What about for that? So let's kind of rapid fire through these, Jen. Let's go with the first one. Can I use this money to pay bonuses?
Yep, you can. You're going to have to watch getting up against that $100,000 cap per person, but you could use PPP funds to pay bonuses.
What do you mean by the $100,000 cap?
Well, you're supposed to pay people a prorated $100,000 at most. So $100,000 over 8 weeks turns into $15,385. And so if you give someone, $14,000 over that period and you give them a big old bonus, it's not going to be forgiven. So if you're doing it, again, do the math. Make sure you have a good plan.
And that would suggest that even if I were to do that, I may not want to pay more than that $15,385 out of the PPP money to that person, right?
That is exactly right.
Okay, so that might make it a little bit complicated, actually probably a lot bit complicated on exactly how you fund your payroll. But this is back to Jen's earlier point. Do the math, think this through, understand what happens if I pay $200,000 in payroll, but $50,000 of it's excluded because it was to people over at an annualized rate over $100,000. Maybe I should have paid those people from other money and being able to use this other money for forgivable purposes. So just be very careful.
Yeah.
Plan on this. All right, let's hit the next one. How about 2019 profit sharing contributions? What about that?
In my mind, this is a no. This money is meant to be used for payroll now and benefits now and to pay people for what they're doing and contributing in 2020. This is all about helping 2020 happen.
Got it. Okay, here's the hardest question we're going to deal with today. Can I use PPP funds to buy inventory?
No.
Good, thank you. I told you it was going to be a hard one. Yeah, just don't go there. It's very clear what the authorized uses are. That's not one of them. Okay, moving on. Owners get paid by K-1 sometimes and not by W-2s. So can we use those payments in calculating our payroll costs for forgiveness purposes?
Yes, sir. So on the K-1, there are boxes that describe the earnings as self-employment earnings, and they are the same thing as wages. They're akin to wages. It's what LLC owners and members get paid. Again, it is subject to the $100,000 cap, which is $15,385, and they are going to ask for the K-1 to be documentation ultimately. And so you want to make sure you're not paying what's called distributions of profit. You actually have to pay the owners what are called guaranteed payments, and they are designated as self-employed income on the K-1, just like a W-2 is income for work performed for the organization.
Got it. So guaranteed payments, not distributions.
I would say so.
Okay, let's move into the other part of it. I know I can put health insurance premiums into payroll costs for my employees. What about for the owners?
That's a no. Owners' health insurance premiums are not an eligible use of PPP funds.
Okay.
Only staff.
What is in and what is out of the utilities equation?
Okay, help me not miss anything. My first answer is telephone is a yes. And this is an important one because sometimes people are actually paying cell phone bills. If they are used for business, necessary for business, telephone. Obviously, gas, water, electric for your office. And then there is cable if it is providing you with your internet access. So it can't be HBO, John. It needs to be cable that you use for your email. I'm very sorry about that.
But I sit here and watch The Godfather every day.
No, Netflix is not reimbursable. But
difficult.
if you use that for your internet, it is. So internet access is a use of it. And then they have this weird thing where they talk about transportation costs. And upon doing some research last weekend, because I thought that made no sense, how is transportation cost utilities? And we kept looking at that and going, what are they talking about? It appears to be relevant for self-employed people, Schedule C people, and it's really for gasoline that they put in their car that they use for the business. That's my story, and I'm sticking to it.
If I had a fleet of delivery trucks, would that gasoline work too?
I think so. And I think if you were an owner and you use your Harley Davidson for your major business vehicle, it might also cover that.
Ah, good. All right. Now we're talking.
Mm-hmm.
Okay. So we've talked about payroll costs. We've talked about utilities. Let's talk about rent. Everybody knows rent is a part of the equation here, but what about this? I've got a triple net lease, which includes, in addition to my actual space rent, property taxes and insurance and common area maintenance and things like that. Do I just get to use the total amount that I pay my landlord in the triple net lease?
No. Again, your lease is going to be your documentation for this. So if you pay it all in one chunk, you're going to need to strip out the rent and use the rent and only the rent in your PPP allocation.
Okay. The next one, I cheated a little bit back at the beginning and kind of already asked this. If we deferred our March rent, because we could, and choose to now pay it during the covered period, is that forgivable?
And the answer is no again. And really what we're talking about, folks, is the fact that the CARES Act, which is scary to read, says incurred and paid. And there's a lot of talk, incurred or paid. It's probably both incurred and paid. So what that means is it needs to be used for expenses that are relative to your 8-week period. So that it's a business expense that's necessary and usual in that 8-week period that you also pay, which means that you can't accrue your rent, book it, and not really pay it. Similarly, it needs to actually be relative to this 8-week period. So play it safe. I keep saying that we all need to keep it simple. Just keep it simple. Don't get fancy.
Got it. All right. Well, let's come back to payroll costs because I know an awful lot of people along the way need to bring in temps and things like that and end up having to pay the agency. They don't pay the temp directly. The agency does. Do I get to use that in my payroll cost consideration?
That's a no, because the temp agency is using those folks on their PPP loan if they have one. And this for you is a payment to a vendor, not to an employee who gets a W-2 from you.
Got it. Okay. And then last question around use of funds. There's all this talk about 75% needs to be spent on payroll in the forgiveness amount. It also says in some of the guidance it's 75% of the loan proceeds, which is a different number. So I've got some money left over. I got given $1 million. I spent 800,000, 600,000 of it was on payroll. So I hit my 75% on my spend, but I didn't manage to spend all the money. So I've got $200,000 left over. Can I use that for anything, or do I still have to stick within the authorized uses of the program?
I would go back to the loan document on this, and several of the loan documents that I have seen refer back to the PPP application and the fact that everybody said they would use it for these specific uses. So I wouldn't rush out and spend the money on anything other than what we're calling allowable. I would always use the money, even if it's left over and I use it into the next month, I would also carefully use it on allowable spending, which is payroll, rent, and utilities, really.
So just out of curiosity, how are they going to know?
Well, they're saying they're going to audit, and they are saying they are absolutely going to audit anyone with $2 million or more, and that they might audit people with less than $2 million. And if you listen to Mr. Mnuchin, he is very seriously saying that he intends to audit anything that smells or looks funky. So I would be
Even after
careful.
the covered period.
I'd be careful. We don't know. They haven't said, and you never know what they're going to say. So again, I'm back to be safe, be simple.
Here goes my Learjet again. Okay,
That's correct.
let's get into forgiveness stuff here, because we're running short on time. We've got about 10 or so questions in here. Does forgiveness use the same $100,000 payroll cost per person limit as we had to do on the front end in the loan application itself?
Yes.
Great, that was easy. Next question. Can I include the payroll costs in the forgiveness calculation for people I did not include in the loan application? This came up in some conversations with law firms where they didn't include the compensation for equity partners when they made their loan application, then found out they could have, but by then they'd already gone down the path with the bank. Can they now include that on the backside?
Yes. They should have. They could have. And now I think that I would include these people. I would use the PPP money for the purposes that it was intended for, and I would do it happily and feeling good about it.
Great. That's a relief. Let's move on to number 18 here. I don't think I can get to that 75% payroll threshold. Can I maybe repay some of the loan, lower my denominator? Is that going to make my chances any better?
I've been answering this one for the last 2 days. If your loan that you got is a certain amount of money, that is the amount that you have to have 75% of for payroll. The way to lower it is to return it, but also have your loan documents rewritten so that you actually borrow less. While there is no prepayment penalty and you can send some money back, it doesn't necessarily make sense to do so unless they actually reduce the amount you borrow. So I would want the loan documents changed if that's possible.
And the bank may or may not want to do that. Okay, so
Yeah.
we've heard a lot in various readings and other webinars that we've done about the two reduction factors that go into forgiveness. One is around reduced salaries and wages to employees, and the other is around your actual FTE count, full-time equivalents. So, Jen, let me ask you this. What's a full-time equivalent?
Well, if you're asking a wage and hour payroll person, they will usually say it's a 40-hour work week, and that's how they calculate people's hourly wages, because everybody pretty much works a 40-hour week. In the Affordable Care Act, the ACA, also known as Obamacare, it's 30 hours a week because that's what qualifies for full-time and benefits. So it's either 30 hours or it's 40 hours. And having done the math both ways for several clients in the last week, there isn't much difference on that. That's the good news. So right now, I would say you need to identify it strategically, be ready to do the math both ways. Again, this is a calculation factor.
Got it. Okay. Well, still on the subject of payroll costs, a question that often comes up is I've had people leave or I've needed to fire people and pay them severance. Do I get to count that as compensation? And what about PTO? Can I just pay people out their accrued PTO and use that as part of my payroll cost?
Yes, you can. You need to be cognizant of the fact that it will reduce your FTE though, which we just said was one of the factors where they might punish you a little bit. If you paid out severance and PTO, it goes to reason that you've also just reduced your FTE, thereby reducing your forgiveness calculation. And by the way, on FTE, that's different than head count, which everybody applied for. All their loans were based on head count and number of positions. So John, if you and I both worked part-time at a restaurant and you did 20 hours and I did 20 hours, on our application, we were 2 head count. But on the forgiveness side of things, you and I are 1 FTE. So there's some tricky stuff going on here. Everybody has to go back to their application and do the FTE math if they didn't do it on the front end.
And just so I'm clear, I can pay severance and PTO to somebody that leaves, that I've let go. But if I've got people that are still on staff and I say, I'm just going to zero out your PTO and give you a lump sum right now, that's not forgivable. Is that right?
I think it might be, but here's what you'd have to do. That's an HR policy change. And it may not be compliant with labor statutes depending on what you're doing and why you're doing it and where your company is. So technically, I would hesitate to do that for a lot of reasons, not just the forgiveness reason. It might not be a good business practice.
Oh, so you're telling me it's unforgivable.
I think so. I think it's bad behavior.
Ba-dum-bump. Okay, moving on. Please, quickly, get on with it, Schweisberger. Number 21, how about HSA contributions to employees? Is that part of health insurance?
I'm going to say yes. It doesn't say no anywhere that I can find, and it's a health insurance equivalent in my book.
Okay, on the same subject, defined contribution plans versus defined benefit plans. Any difference?
No.
Good. That's easy. I like that. We like easy ones. Self-employed individuals, there's obviously a lot of those. Can they have non-payroll costs forgiven, or is it strictly limited to their payroll cost?
If you are self-employed and you get a Schedule C, it means that you don't get a W-2, and the application and the forgiveness are going to be based on the amount of your net profit from self-employment in 2019. So you have to get your 2019 tax return done. And if you had net profit of, I can't even do them, $100,000 last year, you are eligible for 8 weeks of $100,000. That's what you're eligible for. There is a lot of discussion about the fact that if you also rent an office, you actually do pay for and rent an office, and you're self-employed in certain circumstances, you might be able to also deduct that. But if you are in a Schedule C, I think that the straight up answer is it's 8 weeks prorated of your 2019 Schedule C. If you have other staff though, and you have rent of another office, you are probably going to be able to get more from this reimbursement because you're supposed to pay for yourself and also your staff, okay? It gets a little dicey because a lot of self-employed people on a Schedule C work out of their homes and they don't have staff. In those cases, they'll be very strict and they will limit it to just the Schedule C net profit. So everybody in that situation has to be ready to show wages paid to other people, rent paid for a warehouse. You have to show that you don't just work out of a shed, which they literally use in the guidance. They use the word shed, and that people work out of their sheds, and that that's not allowable.
I do gardening in my shed. That's about it. Okay, let's move on towards the end here. We've got an employee that has resigned. We didn't lay him off. They resigned. Will that affect my FTE count for the purposes of the reduction calculation?
Yes, if they resign and you don't replace them. However, if you beg them to come back or you have offer someone else the job and they decline it, the answer is they will not reduce it. So I would make sure I offered someone else the job, and even if they say no to it, that would help you. They will not count it against you if someone declines the job offer.
So we're not comparing employee to employee. We're comparing number to number, correct?
Exactly, exactly. And there are people who are happier on unemployment, it's turning out. We're learning that this week. And they are turning down the job offer. So what I'm saying is document the fact they turned down the job. Don't offer them the job by texting them. Put it in writing and have them decline the job in writing, and then it won't go against your head count.
Oh, so that will reduce my denominator for comparison purposes?
Yes.
Oh,
Yes.
that's good. That's
Yep. Good
very
news.
good. Okay, flipping to the other side of the reduction factors, there's the headcount side, or I'm sorry, I just used the wrong word. There's the FTE side, and then there's the salary and wage reduction factor that can also be applied here. So does it count as a wage reduction if I say to my hourly employees, yeah, we're not going to pay overtime during the covered period, even though you were getting it before? Or for my salaried staff, I know normally we do a bonus payment around Memorial Day. This year, we're not going to do that. Does that count as a wage reduction?
No, as long as you maintain the base. And furthermore, if you pay their base salary and you reduce it, you're still okay even then, as long as you don't reduce their base pay by more than 25%. So not only are these okay, but if you have to roll back salaries a bit, 10%, 20%, you're not going to get dinged for that either.
There's one little clarification on that one though, Jen, that I want to make sure that everybody understands. We fully expect this to change once they finally bring out the forgiveness guidance. But as it's written right now, the salary reduction factor applied against the forgiveness is a function not of the average, but of the total compensation in the covered period, employee by employee, as compared to the first quarter of 2020. Think about that for a second, though. How long is the covered period? 8 weeks. How long was the first quarter? 13 weeks. The way it's written right now, we're taking total compensation in the 8 weeks and comparing it to total compensation in the 13 weeks. And if that number turns out to be less than 75%, you've had a wage reduction. Your forgiveness factor goes down. Now, it makes no sense whatsoever. We suspect they just forgot to put the word average in on both sides of that calculation. But until such time as they come out and clarify that, it's really important that you know that you're basically looking at 8 versus 13, which is 61.5%, not 75%.
Right,
So
which, it makes zero sense to me, so I choose to ignore it. I pretend it didn't happen. But I also think it's important to realize that they're looking at it employee by employee. And if you reduce my wages by 50% and someone else's by 20%, the person who got a 20% reduction still counts toward forgiveness. But if you reduce my wages by more than 25%, I don't get counted toward forgiveness. So that's dumb. If you've got someone who you're paying at all, you want to pay them at least 75% of what you paid them during whatever period we're talking about, and think of something that makes sense, because this doesn't necessarily.
Oh, it absolutely doesn't make sense. And that's why I prefaced it with, we expect it to change, but if it doesn't, you need to know that. Okay, Jen, you ready for the last and final question?
Hit me.
All right, here you go. How long after my covered period ends do I have to file my forgiveness application with the bank?
Okay, this is hilarious. I asked an SBA banker the other day, and the answer was, we are not accepting forgiveness applications until at least 7 weeks after the 8 weeks is over. That was the answer. And then I said, well, what if I never do it? And he said, technically, it just turns into a normal SBA 7A loan. And I said, that doesn't make any sense. And he said, that's right. They probably need to clarify that as well.
So there is no deadline per se for a borrower to file their forgiveness application.
Yes, it's shocking, and it's true. But if you got this loan, think about it, because you want the element of forgiveness, you actually want to get on this pretty quickly. So our advice has been, during the 8-week period, do a lot of math, use the money wisely, and then as soon as your 8-week period is over with, immediately start tidying up your loan forgiveness package so that the second your bank is accepting it, you can submit it and get that loan forgiven as soon as possible, because it'll reduce your interest payments and also give you a lot of peace of mind. You'll know where you stand.
And the bank, they've got a deadline, right?
I don't know, John, do they?
Oh, I do. Yes. 60 days from the date that they receive their application is when the bank needs to render a decision and communicate that to the borrower. So 7.5 weeks, or I guess that's 8.5 weeks. I can do math. That's how long the bank has, but you as a borrower are not obligated to live within any deadline, at least as written today. Again, with all of this, all 26 of these questions, we've told you what we know and what we suspect. And with all of it, it's subject to change, as so many things in this program have been. But this is as it stands right now in the middle of May. And certainly as we get additional guidance, we will make sure we do additional webinars to let everybody know. If you do have your brain completely scrambled by all of this stuff, as many people do, we do want you to know that we have the ability to help you get through all of this process. We have the ability to help you model kind of that plan that Jen was talking about and beyond. We also can help you prepare, do the calculations, and submit your forgiveness application. You can see here sort of what the price points are on those. If you'd like more information, we encourage you to visit the website that you see here, which is learn.armaninolllp.com/SBA. And for more information about anything to do with COVID-19, we do have our COVID-19 Resource Center available on our main website, armaninolllp.com. Right there at the top, you can't miss it because it takes up the whole screen, is a link to our Resource Center, which has nearly 200 articles around these different 5 categories: cash controls and crisis management, handling communications both inside and outside the firm, all this government aid stuff we've been talking about, HR and remote workforce enablement, a whole bunch of stuff going on around that right now as people are starting to figure out, how do I return to work? What does that look like? What can I do? What can't I do? What should I do? And when? So there's a ton of things around that people are asking questions on right now. We've got a lot of answers right here on our Resource Center. And finally, for an awful lot of different industry-specific issues, we've got points of view that are prepared on the COVID-19 Resource Center there as well. So strongly encourage you to check both of those out. You can get a lot of great information, and we will continue this webinar series next week with more, hopefully, guidance issued between now and then. We'll happily walk you through that as well. Jen, thank you so much for being a part of this webinar.
Thank you.
We will talk to you all soon. Thank you.